This year has not started very well. Most altcoins are down, and of course this is partially due to Bitcoin going down as well. Actually, the altcoins, comparatively speaking, held up relatively well. The others' dominance, the measure of all of crypto that's currently in the altcoins, that's actually up year to date. But of course, Bitcoin is selling off, Ethereum is selling off, and in this live stream we are going to discuss this. And of course, in this live stream you can also ask your questions one more time. Feel free to simply chat whatever you want in the chat. Feel free to ask questions, feel free to discuss things. I try to answer as many things as possible. And of course, very much appreciate if you also gave a like for this video, because that will help the channel grow. That will help also this live stream to get spread a bit further. So let's start off with Bitcoin. This was the big sell-off. We went from 97k down to roughly 60k, a drop of almost 40% in the span of just roughly 2 weeks. And then many people were hoping for a quick V-shaped recovery. That recovery did not come. Yes, we had a slight bounce because some forced liquidations, they got bought up, but that bounce was not very long lasting. We tend to trend down again, and today is just another representation of the general trend. Now, what do I mean by general trend? I mean, of course, the best moving averages. So you've probably seen this by now if you've been watching this channel for a while. I like to use the best moving averages to time the Bitcoin market. I also like the same approach to time Ethereum, to time Solana. And the longer term of those two moving averages for Bitcoin, that's the 125-day, the line in turquoise, that has been bearish since October of last year. And that's also when I started to bet on falling prices. I like to bet on falling prices whenever we are below those moving averages. I like to bet on rising prices whenever we are above. And that's why the vast majority of the community here also hopefully didn't lose as much as the average market participant. Now, what does this mean? I've backtested all the moving averages from the 2-day all the way to the 200-day. The 44-day simple moving average is the best for Bitcoin. Afterwards comes the 125-day. If you do not use any leverage, then you can simply just use the 125-day and be relatively off the market. You do not have to trade the market as frequently compared to the 44-day. So if you've got a longer time horizon, just take the 125-day. If you want to squeeze out the last bit of performance, take the 44-day. We show both moving averages over here in this chart. And this is then the backtested result, right? This is 44-day. That's the backtested return, the line in turquoise, and that's buying and holding Bitcoin over the same time period. And here we've got the same for the 125-day simple moving average. So 125-day tends to slightly underperform 44-day, but it's less actively to be managed. We can just trade relatively infrequently and still have the majority of the gains. And because of that, our moving average vault also made quite a bit of money. That started in October of last year, very close to the all-time high in Bitcoin. We are up roughly 15%, while Bitcoin during the same time period lost 44%. So that's how we have been able to avoid the majority of this crash. Actually, measured in Bitcoin, we are up already more than 100%, right? If we just look at how many Bitcoin do we now own, if we avoid a close to 50% crash, if we even make some money during that time, we more than doubled our Bitcoin stack. And the backtested performance actually gives us 115% of our buying and holding Bitcoin. So we are ahead of plan, right? We already doubled since October of last year, and usually that kind of doubling only happens once every 12 months, not once every 4 months. So that's the little beginning of this little live stream. We are going to talk about not just Bitcoin here, we're going to talk about the altcoin market, we're going to talk about Ethereum, we're going to talk about Solana, and there are interesting glass ceilings across all of those different assets that I want to discuss, where in hindsight it seems like it was obvious that we should have sold at that particular point in time. But of course now things are much more obvious, right? We are down more than 50% in Bitcoin, much more than that in Ethereum and Solana. And so whoever still thinks that we are in a bull market, I'm not sure what to tell them, right? It's relatively obvious we don't drop by 50% in Bitcoin when we are still in a bull market. So something has changed, the momentum has changed, and in prior bear markets at least, we tended to drop at least 70%. Somewhere between 90 and 70%, 90% in the early days, then it got closer to 80%, the recent crash was a bit over 70%. So 50% is probably not the bottom, at least if history is an indication. But let's have a look at the chat messages. Thanks, of course, for tuning in. And let's see what we've got over here. And of course, again, if you're just joined here, feel free to give this a like. It will help to spread this stream in the algorithm. Thanks, Mugen 2000. The live stream format is superb. Thank you very much. It's a different way of communicating things, right? When the market has moved in a direction and when the content needs to be a bit more timely, I think live streams are quite useful. It's also nice to just talk to you guys. You are without a doubt a true German. Yes, I am originally from Germany. I moved to Asia roughly 15 years ago. I'm now in Kuala Lumpur, used to be in Hong Kong for a long time. Good afternoon from Quebec, Canada. Let's see. I lost my house so far, down pretty bad. Sorry, whipping yams. Risk management is really everything, not just in crypto, in general in investing. This might come a bit late, but you want to be diversified across asset classes. And if your net worth is relatively high compared to your income, you want to lean even more towards diversification and be rather more risk off. Like the stream, thank you, thank you. Bitcoin at 1 million at year end, very unlikely, right? I rather think that we're going to further decline from here. More on that in a second. Sound is away. It's the first message I get like this. I don't think it is. I see here also an indication that the microphone is recording properly. But let me know in case there's any issue. Okay. You think the strong utility tokens will decouple? Do I think the long utility, the strong? Do I think the strong utility tokens are going to decouple? Probably not, because again, most altcoins are highly correlated to each other. They're even directly bound to the major asset classes. So when you look at the on-chain data, when you look at certain tokens, say on the Ethereum chain, usually the liquidity is directly coupled with the Ethereum price. So when the Ethereum price is going down, then any altcoin will go down directly as well without even a single transaction happening. So it's quite unlikely that the altcoins will decouple from Ethereum. I think it's more likely that crypto will decouple from traditional finance. It already has to a degree in the last few weeks, right? The Nasdaq was relatively stable while Bitcoin and Ethereum crashed. So there is a decoupling happening, not necessarily decoupling in the direction that we like, but that's more likely because those are different asset classes and different asset classes tend to not be as correlated. But whenever we've got an asset within an asset class, right, when we look at different stocks within the stock market, when we look at different houses within the property market, when we look at different cryptocurrencies within the crypto market, we tend to see a lot of correlation. So this is where I think many people have it wrong. Many people think that we can achieve diversification in a portfolio, that we can reduce our risk in a portfolio by simply buying different things within the asset class, by simply owning the entire S&P 500. But I don't think that this is how diversification works really. What you want to have is different asset classes. We just want to pick the best thing in an asset class, if we can, if you have the ability to pick the best thing. Otherwise, we just take the benchmark of an asset class, the typical asset, and then we just want to own different assets. So the ownership of different assets is actually how diversification is achieved. It's not necessarily buying different assets within an asset class. Hope that helps. Can we see 10x from here on average for altcoins? Yeah, I do not think that we're going to see a 10x in any altcoin anytime soon. Altcoins tend to be bought the most when we are at the end of a bull market. So in the past, when we had altcoin seasons, we saw Bitcoin rallying quite a bit. And during that bull run, the altcoins already appreciated quite a bit, but the others' dominance did not necessarily rise. What we then tended to see is after Bitcoin has already achieved a 5 to 6x return from the bottom, that then the rotation into the altcoins accelerated. So yes, we did come up 5x to 10, 5, 7, 6x, something around that line, right? We went up 5x to 7x from the bottom in Bitcoin, but we didn't go up quickly enough to generate enough attention for crypto. And usually it takes new retail investors to buy the altcoins. So if we just go up very slowly and the long-term holders continue to take profit along the way, they're simply not quick enough of an appreciation to bring new outsiders into the space, and so the altcoins aren't going up. What went up in the last year was the precious metals, right? It was mainly silver. Everybody talks about silver. That's usually not in investing. Nobody talks about crypto. And so that's the problem, right? We need to have Bitcoin and Ethereum and Solana appreciate quicker than any other asset, and then afterwards the altcoins might rally. Before that, I think it's very unlikely. Thank you for the question, JD007. Let's continue with the charts that I've prepared. So there is this very interesting ceiling across many asset classes within crypto. So it seems like for whatever reason, we can't really get beyond a certain ceiling, and that's true for the altcoin market as a whole. It's also true for many other assets. So what we see over here, that's total 3ES, so the entire crypto market, excluding Bitcoin, excluding Ethereum, and also excluding the stable coins. So we look at all of the risk on assets. They're not Bitcoin and Ethereum. And for whatever reason, right, for the last 4 to 5 years, we were not able to exceed that market cap beyond this line here, right? 950 billion. When we look at a slightly different metric, so that's the others market cap, that's all of the altcoins that are not in the top 10. So that's the smaller altcoins, not just altcoins in general. That seems to not have exceeded 450 billion. When we look at Ethereum, we've got the same picture, right? It can't exceed 480 billion. So for whatever reason, different asset classes, we've got the same for Solana, by the way, can't really exceed this ceiling. At some point, people take profit. Have a look at the following. This is Solana's market cap. Here, the ceiling isn't as obvious, right? Here, the tops align, and over time, this tends to go up. But with the recent bear market, it also sells off. It sells off more than Bitcoin and Ethereum. I've actually prepared a video for that. This will be published in roughly 12 hours. And over here, we've got Bitcoin long term. So the altcoins, they're simply stuck. Ethereum is simply stuck. Solana was able to outperform slightly. Bitcoin was able to outperform the most, right? Bitcoin was able to create new all-time highs. But the interesting thing is that once we look at Bitcoin relative to other asset classes, this outperformance suddenly goes away as well. We might consider that maybe Bitcoin is outperforming because it has all the purchases through the ETFs and through the treasury companies. But really what I think is simply that risk on assets tended to do well, and all the other assets within crypto, they didn't reach new all-time highs because it simply got too much selling pressure in the meantime. Bitcoin is still getting held by a lot of long-term holders. Ethereum, not necessarily so. So have a look at the following. This is Bitcoin relative to USM2, so relative to the US money supply. And in the past, from one bull market top to the next bull market top, we had hundreds, potentially even thousands of % of return. That has already diminished massively from 2017 to 2021. Here we had only 140% of outperformance relative to USM2. The outperformance even declined further the last 5 years. Here we've got only roughly 60% outperformance. Still a higher high, but it is definitely diminishing quite a lot, especially measured versus USM2. But now measure Bitcoin relative to the Nasdaq 100. So this is now Bitcoin measured as another risk-on asset. Here we really have pretty much no growth at all. So the new high that we got in May of 2025, it almost perfectly aligns with the high in March of 2021. Yes, we could argue that there's maybe still a bit of gains to be made, 12% outperformance of Bitcoin relative to the Nasdaq 100. But is that outperformance really worth it when it crashes by 71%? The outperformance is only worth it if you're willing to time the market, right? If you're willing to buy low and potentially sell off high, to try to time the market using, say, the realized price or using the net unrealized profit and loss, using some kind of cycle indicator, then of course volatility is good. But if you're just buying and holding, if you're a hodler, then it's not necessarily that great that we get that little outperformance as a risk on asset relative to, say, the Nasdaq 100, right? We do not want to have that much more potential downside for that little additional upside. So that's a potential problem that we face with Bitcoin long term. The returns are not just diminishing in US dollars, the returns are diminishing even more relative to other risk-on assets. And why does this matter? It matters because Bitcoin tends to move in the same direction as other risk-on assets at the same time. So we've got Bitcoin at the top, we've got the Nasdaq 100 at the bottom. They both had the COVID crash, they both had the COVID recovery. They both then went into a bear market at very similar points in time. They both also bottomed at the same time. And the only difference that we see now is recently a slight decoupling in the way that the Nasdaq 100 didn't really move much, while Bitcoin, of course, is on its merry way down because the long-term holders started this negative momentum and then the short-term holders had to capitulate. But in general, right, Bitcoin is still traded as a risk-on asset. It's much more correlated with the Nasdaq 100 than it is with gold, for example. And because of that, the outperformance versus another risk-on asset matters so much. Okay, let's have a look at a few more chats. I hope so far you're enjoying this content. Of course, if you do, feel free to subscribe. Feel free to also, in case you haven't done this yet, subscribe and give this a like. This will help the channel grow. So let's continue with a few more chats. If this was the top and diminishing returns are expected, what sort of top could we expect in the next cycle? You previously spoke about the long-term holders trending upwards. Is this still the case? Yes, it very much depends on what kind of measure you use for the long-term holding. The number of Bitcoin that's held by people, the number of wallets that hold at least one Bitcoin tended to stop growing after the ETF launch, unfortunately. When we look at the holders that have traded Bitcoin within the last 180 days, they're actually slightly buying right now. So you can see the purchases over here. There are a few purchases, but they're not as aggressive. So let's isolate this. They're not as aggressive compared to prior dips, right? In prior dips, the long-term holders tended to buy more aggressively. Now the buying is a bit more muted. And so those purchases, I believe, aren't enough to create a real turnaround. If you look at the very, very long term, so let's say the hodl waves, right? So how much of Bitcoin is held by different holder categories? And you look at this in terms of years, not just in terms of a few weeks. Then of course, there's more and more Bitcoin, relatively speaking, that hasn't moved for the last 10 years. There's more and more Bitcoin that hasn't moved for the last 7 years. There's also more and more Bitcoin over time that hasn't moved for the last 5 years. And this is what I like about this chart. Actually, it shows us at what particular time frame does this flip. So when do we turn from a long-term investor to somebody that tries to just ride the markets, that tries to time the market? The cutoff, interestingly enough, is at the 3 to 5 year mark. So if you do not hold Bitcoin for at least 5 years, you have to expect some volatility. So all the wallets that hold Bitcoin for 3 years, right, they tend to sell off during a rally. So when Bitcoin is going up, those kinds of wallets sell. When Bitcoin is going up, those kind of wallets take some profit. And they're also taking profit recently, right? They're still taking profit. Not that much anymore in the last few weeks, but in general, right, they tend to rather offload. If your time horizon is longer than 5 years, then you can ignore the cycles. If your time horizon is shorter than 5 years, then of course you do want to be a bit more careful, and you want to make sure that you take advantage of our on-chain metrics. Hope that's useful, right? In case you haven't yet seen this HODL wave, I think it's quite nice to see that over the very, very long term, the liquid supply is contracting. The long-term holders, as a percent of all of Bitcoin circulating supply, tend to hold more and more Bitcoin over time. And that then means that, of course, Bitcoin has to at least outperform the fiat debasement, right? Fiat currency debases by roughly 6.8% per annum. So that's the minimum growth rate of Bitcoin. It's the growth rate of the prices of the S&P 500. And I do expect the same at least for Bitcoin, but probably outperformance will be more than that because the liquid supply tends to contract over time, because Bitcoin gets lost, Bitcoin gets stacked away by the very long-term holders that hold Bitcoin for at least 5 years. And so because of that, 7% per annum is the minimum. It's probably going to outperform. But also the Nasdaq 100 tends to outperform long term. So then it's the big question, right? What's really risk adjusted, the better bet? Hi Gerhard, given others are rallying against Bitcoin and aggressively rallying against the blue chips, do you think the short altcoins, long major caps trade could be entering a regime change? No, I do not think so. So the idea here is the following. Let's go to this. So let's look at the others dominance. The others dominance since the beginning of the year went up by 9% roughly, and we started our relative valuation trade vault over here, right, a few days after deposits finished. That's up 6 to 7%. So the altcoins actually did outperform since we started betting on falling altcoins. The relative valuation vault currently is down slightly by 2%. So not by 6 to 7%, but by 2%. We were able to mitigate some of that altcoin outperformance. But the question really is always about the very long term. Right, when we look at the altcoin performance since the beginning of 2022, they are going down. And what we are currently discussing is how there might be a regime change because of this rally over here. But this is just simple long-term fluctuation. And what the others dominance is showing is the altcoin market cap. It doesn't even show the altcoin price development. And that's something that many people don't really understand. Many people think that when the others dominance is going up, or when altcoins in general tend to do relatively well, that this is a long-term change. But really what's happening is that the altcoins tend to expand in supply over time. So early investors and the team, etc., they get new tokens unlocked over time, right? This is called the vesting unlocks. And because of those unlocks, they have the option at least, and many people exercise that option, to sell that new allocation. So the liquid supply of many altcoins is going up over time. So let's say the liquid supply was to double and the price was to get cut in half. The market cap would still be the same. Right, because the supply doubled, the price got cut in half, but the performance obviously of most investors went down, right? You went down by 50%. And that's the fundamental issue. The issue really is that prices tend to do much worse compared to even what this altcoin or this others dominance chart here shows. And the others dominance chart itself already shows an underperformance of 62% since 2022, but most altcoins went down much more than that. This disconnect is what we take advantage of. And of course, the altcoin inflation, the altcoin expansion happens over many months. It doesn't just happen over 1.5 months. And that's why we didn't outperform since beginning of the year in the relative valuation trade vault. We still are down 2%, but that's okay, right? It's okay because the altcoins in general went up, and I do think that the general trend will prevail. The others dominance really only went up in the past after Bitcoin has already rallied. So we can add Bitcoin here at the bottom. Let's have a look at that. The others dominance tended to rally after Bitcoin already made multiple X returns. That happened over here, right, in 2017. It also happened over here, this quick rally in 2021. Bitcoin already went from 3.5K up to its new all-time high. And Bitcoin did hit new all-time highs. The altcoins did not rally, and I think the reason for that is that the appreciation was simply too slow. The long-term holders of Bitcoin just took profit along the way. The appreciation was too slow that we couldn't get enough attention on crypto, and other asset classes outperformed Bitcoin. That was the major problem. Have a look at Google Trends, for example. When you look at the searches for Bitcoin and BTC, so let's look at Bitcoin. When you look at that trend over time, right, we didn't really go up that much. When we look at the all-time chart, when we appreciate very quickly in Bitcoin, that's then when subsequently the altcoins can go up, right? So that was true in 2017, that was true in 2021. Subsequently, the altcoins did very, very well, and there's simply not enough attention on crypto when the appreciation is so slow. And when there's not enough new people coming into the space, then the altcoins have a bad time, and so I do not think that they will outperform anytime soon. I do think that the others' dominance will continue to go down, or at least the altcoin prices will continue to go down. Okay, give me a second. I have a bit of a cold. Okay. When can we deposit into the vault? You can deposit anytime, right? You just join the premium membership, and then you will have access to the Bitcoin trend following and the Ethereum trend following. And if you want to join the Relative Valuation Trade Vault, you also need the annual plan. But you can already start off with copy trading just with the monthly plan. So you can deposit anytime. Hello, really got motion. Nice to see you. Unfortunately, on a day that's not too bullish, but still nice to see you here. Thoughts on Hyperliquid? Hyperliquid is a great platform. I like to use it a lot. It's also how our relative valuation trade vaults, 2 out of 3 are set up. The team is still actively working on the platform. They are trying to compete now with Polymarket. We don't know if that will play out well, but the team is doing something actively. There's a lot of hype around Hyperliquid. Unfortunately, the tokenomics are really bad, so the team can cash out very quickly. They decided now to cash out a bit slower than initially planned, but they could dump on us anytime, and so that's the problem with the Hype token itself. But the Hyperliquid platform is great. Utility tokens with bad tokenomics have no value outside of speculation. They have value in terms of betting on falling prices, right? If you bet on them doing worse over time, you tend to make money. Do you think we rally above 80k before a massive drawdown? Whenever we look at these very short-term price developments, I tend to be less confident. So that's actually what many people, I believe, do wrong. Most people tend to take a lot of leverage for short-term trades, while for the short term there is a lot of uncertainty, there's a lot of noise, right? A single whale can push this up or down, and we don't know what all the whales in crypto are doing. So there's a lot of random noise in the short term, there is less random noise in the medium term. And that's why I tend to rather try to bet larger amounts with some leverage for the long-term trends, and while I don't trade the very short term. I'm okay to be wrong in the short term. Even if Bitcoin was to rally now by say 15 or 20%, I'd still be bearish, right? We are still below the best moving averages. And so you could of course just wait until we potentially bounce a bit and then enter a short. But I'm okay to just keep my position open. I'm okay to not over trade. Do you think regulatory uncertainty is the culprit of this bear trend? Will the signing of the Clarity Act favor to crypto bring back a speedy recovery? No, I do not think that it's regulations that are a problem here. Regulations, especially in the US, tend to rather be positive for crypto now, right? They tend to be supportive of crypto. What I think is going on here is simply that people are taking profit since many massive whales bought the bottom. They bought at around 20k, 16k at the prior bottom. They are still, even after this crash, in net unrealized profit, and so they're just realizing their profit. If the momentum dies down, then we rather want to get out very quickly, and then we buy back in again once we are low enough again. So that's probably a thinking here. There's also this idea of the self-fulfilling prophecy, right? So let's say we've got the 4-year cycle. We compare prior bull and bear markets. We look at what point in time did the bull market start and how long did it last and when did it turn around. So when we measure the cycles from the cycle bottom, then this top that happened at the 120k is pretty much expected. It pretty much happened bang on in the same weeks as prior cycles. So the duration is pretty much the same, and so this can simply just become a self-fulfilling prophecy. So the idea really is that if enough people think that something will happen with crypto prices, that it will indeed happen. So in other words, if everybody thinks that an asset is very, very cheap at a particular point in time, they might simply buy it and they might stop selling it. When many people think that something is expensive at a certain level, then the price will not be able to appreciate anymore. And I think that this is also partially the reason why we've got these glass ceilings for those different metrics, right? If everybody thinks that now altcoins are expensive, they will not go up anymore, right? This is true for both of those metrics. It's also true for Ethereum, for example. When everybody sees that Ethereum is an all-time high, the question is always, what's really at that point in time the potential risk versus reward, right? When the risk from the all-time high to a potential bottom is close to 80%, but we don't necessarily expect a doubling of Ethereum's price when it's already close to the all-time high, then it might make sense to take profit. That's probably what's happening. It's just self-fulfilling prophecy. It's just the psychology of the market reinforcing itself. Have a look at this here, right? This is Bitcoin's number of active addresses long term. People think that Bitcoin is still very long term, getting more and more adoption. So people think that crypto is still early and that it's still growing. But really, when we look at the number of active addresses on chain, that's obviously not true. That's for Bitcoin. We've got the same picture for Ethereum, right? So there's a number of active Ethereum addresses over time. Really, over the last years, this did not grow. And so that's a problem, right? Bitcoin is not necessarily anymore a technology to transfer value, to be used in day-to-day commerce. It's just used as a store of value. It has just repurposed itself to a degree. And so that's maybe also one of the reasons why Bitcoin has such a hard time outperforming other tech investments. Right? When it's just yet another risk-on investment that's highly correlated to the Nasdaq 100, then why should it outperform when its on-chain metrics don't suggest further growth? It's just like any other risk-on asset. It just performs like any other thing. Have a look at this. This is the number of active addresses with a balance of at least one Bitcoin. So what we're looking at here is how many people hold at least one Bitcoin and tend to be long-term investors. And this flipped around in October of 2023. And interestingly enough, this is also when the Grayscale Bitcoin Trust launched. This is also when the ETF got more and more adoption. So we can really see that there is a preference by the market not necessarily to hold Bitcoin in self-custody. The idea is novel, right? The idea is, okay, we do not want to have the state involved in anything. If there's some state overreach, we've got something to fall back on. We've got Bitcoin, we've got our custody, we've got our Bitcoin, our capital in our hands. But there's a lot of problems with that idea as well, right? There's the problem that maybe we might lose our seed phrase. There's the problem that maybe we make a transaction that's irreversible that we didn't want to make, right? We got scammed. So there's all kinds of problems with Bitcoin that we do not have with other asset classes, and so people that are not so deep in the space, that simply just want to buy some Bitcoin for first exposure, tend to now just buy the ETF. And this is now putting the brakes even stronger on adoption for Bitcoin. Before, when people were simply just having self-custodied Bitcoin, they would still try the network. They would still try to use it for other things besides just holding it. But now that getting exposure to the asset class has become easier and easier and has been decoupled from the technology itself, it's not that clear that we actually see more long-term growth of the technology. And it seems like the development in many ways in crypto have also slowed down a bit. Right? So everybody that made money in the last 12 to 24 months was mainly just trading meme coins or was trading the momentum, was not necessarily developing a decentralized finance app. Right? All the DeFi apps, Aave, etc., they have been developed in 2018, 2019, potentially 2020. But what happened in the last 5 to 6 years? That was meme coin trading. That was player versus player gaming. And the people that knew the game, they made money. The people that didn't know the game that well, they lost money. There was a concentration of capital. But when the market does not reward new innovation, when the market does not reward new developments, and when the market doesn't even want anymore learning how to do self-custody of Bitcoin, it's very questionable how much long-term Bitcoin can outperform. And so really, I think now it's more important than ever to find ways to time the market, to buy the market when it's comparatively cheap, and to sell the market when it's comparatively expensive. It was okay to just hodl your way through the cycles in the past. That was fine. But I do think that in the future, the outperformance of Bitcoin relative to other risk-on assets will continue to rather go down. Do you think the AI bubble is going to pop anytime this year? And what might that mean for Bitcoin? For Bitcoin, it would be terrible, right? If the AI bubble was to pop, Bitcoin would crash beyond any model that we have. Is the AI bubble going to pop though? I'm not so sure. So the main difference that we currently have with this AI bubble compared to prior bubbles, compared to say the .com bubble, was that .com was fueled by retail investors' money. And so once the retail investor made their gains, once there weren't enough additional retail investors to enter the space, the price appreciation stopped, and then there was the reversal, something that we have seen all the time in crypto. Now, this AI bubble is not fueled by retail investors' money. This AI bubble is fueled by the big tech companies, and the big tech companies, they will find creative ways to raise more money. They will find creative ways to value illiquid assets at inflated prices. And so it's unclear whether or not the AI bubble is going to pop at any time at all. Maybe we just see those elevated prices for a long time and we just go sideways for many, many years, and USM2, the monetary debasement, will make its job. Right, so that's maybe an even more realistic scenario. I'm not sure if it's going to happen, right? Valuations across the board are high. It's not just the AI bubble. When we look at the Shiller PE ratio across all of the stock market, it's very, very high. But I'm not so sure if we will see a real crash as we saw in 2000 and 2001. My expected scenario is rather that we're going to level out at a higher price level, at higher valuation levels, and then at some point after crypto has crashed, we can probably buy the bottom relatively aggressively again once we are below the realized prices, and then we just ride the cycles again as usual. So that's what I personally do, and that's how I personally approach this current market. But yes, if the AI bubble was to pop, that would be extremely dissatisfying. It would be very bad for Bitcoin and for crypto as a whole. Here's the number of Bitcoin that's held by the ETFs. Here's the number of Bitcoin that's held by the ETFs plus the treasury companies. It's one of the reasons why Bitcoin can outperform the rest of crypto. But yeah, the fundamentals of Bitcoin are of course great, right? We've only got 0.8% additional supply hitting the market year over year, while at the same time the monetary base, it expands by 6.8% per year. So just based on that, we should have an expected return of Bitcoin of 6% per annum. But then on top of that, we've got the hodl waves, right? How more and more of the supply of Bitcoin gets stashed away or gets lost. So actually really we've got a circulating supply contraction already. The 0.8% that gets mined is less BTC than what gets lost. And then we have to ride the waves, right? We have to try to sell into the rallies as those kind of holders here do quite nicely, right? They sell into the waves, they tend to buy into the bottoms. So what are the potential turnaround points? We've got the realized price of Bitcoin, which is currently at 55K. I talk about that realized price all the time, right? I want to know at what point in time is the market depressed enough that we can potentially start with first purchases again. 55K is my very first mark. So I do think that at some point we will hit the 55K. I do not have a crystal ball, but that's personally how I set myself up. I do think that in case I want to make contrarian bets, right? I want to make bets to buy below the best moving averages. I want to see us at least below 55K. Potentially for the larger bets, I want to see us below 40K even. That's the long-term holder realized price, right? So that's the overall realized price. Here's the long-term holder realized price. The long-term holder realized price tends to adjust a bit later compared to the overall market realized price, but still, even for the long-term holder realized price, we tended to fall below that at the end of a bear market by roughly 25% even. So the very worst case, if the AI bubble was not to pop, is a 30K in BTC. But already at 40K, it makes sense to buy extremely aggressively, and it makes sense to start buying at 55K already. But I do think that the 55K is very likely to get hit. And of course, then we've got our medium-term trading according to the momentum, right? According to the moving averages. But if I wanted to buy Bitcoin against those moving averages, it would need to satisfy the requirement that we get at least below the realized price, better the long-term holder realized price. That's when it makes sense to buy into a crash against the trend, right? The market has to have sold off sufficiently. Will it be wise now to swap some Bitcoin into energy AI stocks? I do not think so. I think there's too much correlation between the two. If you do this for diversification purposes, just hold different assets at the same time. If you want to swap out of Bitcoin, then swap into something that appreciates while Bitcoin goes down. So that could be shorting Bitcoin directly, or that could be buying something that's not correlated, buying property potentially. Maybe buying precious metals, and among them probably only gold, not necessarily silver. But yeah, you want to buy something that's not correlated. What do you think about MSTR? Is it now trading less than its Bitcoin value? Let's have a look at this, right? So we just look at the MNAV premium MSTR. There's an official page here by strategy. Whenever the MNAV premium is negative, that means MicroStrategy is losing money in theory to make whenever it purchases Bitcoin. So MicroStrategy would not be incentivized to buy Bitcoin. Currently the premium is at 16%, so it's still fine. So MicroStrategy did not underperform Bitcoin that much in the last few days. MicroStrategy should be okay. I do not expect MicroStrategy to sell any of their Bitcoin if they don't absolutely have to. Once they do sell, then of course the entire market would crash massively. Then the entire story around MicroStrategy would flip very quickly. ADA to the moon or dead, your thoughts? Yeah, I don't like to answer questions regarding individual altcoins unless they are very, very popular. Cardano isn't currently too popular. Again, I think it only makes sense to buy altcoins when Bitcoin has already rallied very quickly from a bear market bottom. That's when altcoin seasons tend to happen. Is crypto dead? I don't think it's dead, but the momentum currently is extremely bearish. So it makes sense to be very careful. So maybe I should talk about this in a bit more detail actually. Is crypto dead or not? Because I've already described how I think that the outperformance of Bitcoin relative to other risk-on assets is probably going to go close to zero, right? Or how Michael Saylor likes to say it goes asymptotically to zero. I do think that that's true. But what I also like about crypto is that we've got much more data compared to traditional finance, right? So the institutions, they know actually the realized prices of stocks. They know when a whale is buying or selling. They've got all of this data from the market makers. The institutions in traditional finance can beat the market. But as retail investors, we don't have the data. And that's different to the crypto market. The nice thing about the crypto market is that we do actually know what's the psychological anchor point, the average cost basis of the market. We do know when the whales are selling. We do know what the vesting unlocks are. We do know how the returns are distributed across different assets within crypto. And so if we like to learn about a certain market and we are not directly in it in terms of being employed by a big bank, then I still think that crypto is a nice, inefficient market. It's still not liquid enough to attract the citadels of this world to put massive resources on it. There's simply not enough money in it, but there is enough inconsistency, there's enough inefficiencies in the market to still generate quite a lot of outperformance versus just buying and holding the certain assets. And so that's why I like crypto. It might not outperform long term, but it still gives us enough information to have an edge over the average market investor if we just learn enough about this. So this is always how I think about markets, right? It's about how much edge do we have, how much does it appreciate long term, and if we just learn faster than the average market participant and we become more and more informed compared to all the rest, then we tend to outperform more and more over time. And that then of course helps us with performance no matter if we long-term grow faster than the rest of the economy, right? You can still become rich with very boring industries. If you, of course, have an industry that now starts to grow much, much quicker than crypto, and I'm not talking about AI, I'm talking about the next thing, then it might make sense to switch. Some miners actually, right, that mined Ethereum in the early days, they switched over to AI. But the AI game is also rather a game of the big guys. There might be some neat niches where we could make some money, but I still like crypto. I still like crypto because I've learned it for so many years and it's still so inefficient and so much money is flowing around there. And we can beat the market if we just learn enough about it. And so, is crypto dead? For the majority of people, yes, the majority of people won't make that much outperformance versus other risk-on assets. But for the people that are willing to put in the effort, I think it's not. I think it's still a very nice place to make some nice long-term outperformance. But yeah, thanks for the question. Let's have a look at a few more. At what price would you find Bitcoin attractive to start accumulating? Again, the start of accumulation happens with the realized price at 55K, and then we continue to accumulate with the peak of purchases at around 30K, right? 25% below the long-term holder realized price. Yeah, the Bitcoin price is already so low, but given the stock market is still at all-time high, do you think the Bitcoin risk reward is still very poor? Bitcoin has never seen a real stock bear market. Yes, I regard the risk as being below the realized price, below the average cost base. Or another way to look at this is the net unrealized profit and loss, right? How much are people still in unrealized profit? And if the unrealized profit is comparatively high, or if it's existing at all, then that profit might get taken. And only if the market in general is in unrealized losses do we see less selling pressure. And that's when I want to buy. I want to buy when this NUPL is in the red, not when it's in the green. Can't wait for 40K Bitcoin. I have money on the sideline from selling back in early 2025. Yeah, congrats to you. And yeah, looking forward to this as well. What happens to Bitcoin when the stocks get a haircut? Uncharted territory, but I would say people will panic. This is exactly what I'm waiting for to buy more Bitcoin. Yeah, true. So very likely because Bitcoin has traded in range with the Nasdaq 100. It has also crashed during COVID. It has gone up with the technology stocks. If tech stocks were to really come down from here, if we really see a deflation of AI company valuations, Bitcoin will likely sell off much more than all of those models, right? The net unrealized profit and loss or the realized price would predict. We probably fall much lower than potentially 40 or 30K, right? If AI stocks or if the Nasdaq 100 was to suddenly go down by 60, 70, 80%, then we likely have a levered effect on that on Bitcoin as well. Maybe at some point we see a decoupling again in terms of correlation, but for the very first moment, right, when we've got a liquidity crunch, when things sell off, of course, Bitcoin will sell off even more. I think that's the most likely scenario. It's what we've seen in the past, and this is how Bitcoin tended to trade in the past as well. So those kinds of models that we have here, they might not be that useful anymore, right? We might have to be careful, and we might be in the red for a very, very long time in case AI stocks were to crash. Okay. Do you expect a 4 to 5x of Bitcoin, which would be necessary, as you said, for a 7 to 10x for some altcoins? And when do you expect that? Within 12 to 18 months? And do you believe in altcoin season at all? So, yeah, I do believe in altcoin season after we have rallied in Bitcoin. So there's this rotation happening, right? So the way this works is that during a bear market, right, when we enter this bear market, there are already the first people that start buying bottoms along the way, and then the bottom keeps bottoming until we actually bottom out, and then we see a recovery. And even during the recovery, still it's mainly Bitcoin that's getting bought because it's the safest of the thing. People aren't yet sure if we really enter a new bull market or if this is just a dead cat bounce. So we tend to see mainly purchases of Bitcoin during bearish times. Now, the altcoin rotation tends to happen after Bitcoin has clearly come out of the bear market. So after it has made the 3, 4, 5, 6, 7x. So we need to get a 4, 5x return in Bitcoin first before we see the altcoins outperform. Now, the altcoins also appreciate with Bitcoin's appreciation from the bear market bottom, but they don't necessarily outperform. They only outperform after Bitcoin has rallied and after the people that bought in the bear market, that bought the bottom, they might take some profit and they might then rotate into the altcoins. The major effect though, it seems to not necessarily be a rotation from Bitcoin profit into the altcoins. The major effect seems to really be that Bitcoin appreciates quick enough that then mass media talks about it, then the YouTube algorithm talks about crypto more often, the general population gets more exposure towards crypto, and the new people that enter the space, they are then looking for the next Bitcoin. This was very clear in 2017, right, when we had literally Bitcoin Diamond and Litecoin and Bitcoin Cash. We had literal alternatives to Bitcoin. Then subsequently we had the ERC20 rally, right, the ICO boom. We mainly have this rotation into the risk on assets, into the alternatives to Bitcoin, the things that can do the next 10x. We tend to have this after Bitcoin is already rallied and after everybody agrees that we are currently in a bull market. And that tends to be the end stage of the bull market. It doesn't mean that the bull market is over, but that tends to be where Bitcoin's appreciation slows down and where then the appreciation of the altcoins tends to pick up. So that's how I write all of this, right? I do not buy the altcoins in the middle of a bear market. Really, the main purchases that happen in a bear market are purchases of Bitcoin, because all of the altcoin investors, they have already been wrecked. They've already lost everything. I mean, look at this, right? If you're down over the last year by 70, 80, 90%, what additional capital do you have to buy the bottoms here, right? You can only use this. You can maybe have your regular cash flow that you redeploy, but how aggressive will you redeploy after you've already lost that much? The Bitcoin investors, they tend to lose less during the bear market. The Bitcoin investors tend to have more capital in general to move, and so they are more capable of buying the bottoms, and so that's why also Bitcoin tends to be the first asset to bottom out, and why Bitcoin dominance tends to go up during a bear market, and why it still tends to go up during the first stage of the recovery of the bull market. And so that's how I time all of this, right? I do think that altcoins can outperform, but altcoins underperform most of the time. And so that's why I want to be careful, especially in a bear market. Another question for the altcoins. Have you invested in any altcoin or even know any altcoin with a true use case? outside of the crypto world. There are very few use cases outside the crypto world that are noteworthy. One might consider stablecoins an altcoin, right? And they get used outside of the crypto world to circumvent AML laws, to circumvent capital controls. But outside of that, right, the altcoins are have mainly crypto native value to bind a user to a platform, to reduce trading fees, for example, or to encourage long-term holding via staking. Those are the main use cases for altcoins right now. Do you think Ethereum will overtake Bitcoin in the coming 5 to 10 years? I do not think why it should. There is no real narrative around Ethereum that's strong enough to overtake Bitcoin. Bitcoin is a store of value. Ethereum is a smart contract platform that has a lot of competition, that also has monetary policy that's not as stable as Bitcoin's. So I don't know why it should. What do you think about the idea that altcoins are down because Polymarket is more attractive for gambling? Maybe people have moved on, as it happened before with NFTs. Yes, potentially, right? So Polymarket tends to be the only real thing in crypto that's currently growing. It's a relatively inefficient market. Actually, we can make a lot of money with Polymarket. We bet, for example, on something last year, whether or not Satoshi Nakamoto was to move his Bitcoin, right? The creator of Bitcoin, we don't know who that person is, hasn't moved the Bitcoin for the since the creation basically. And there was this bet on Polymarket, will Satoshi Nakamoto move the Bitcoin? And we bought no, and we got roughly 5-6% over the course of 1.5 months or so. That was annualized roughly 30%. So we got basically 30% annualized risk-free with that bet that Satoshi Nakamoto will not move the Bitcoin. If Satoshi Nakamoto was to move the Bitcoin, then of course the whole crypto space was to crash. But 30% APY for that kind of bet, I think, was close to risk-free. And yeah, there are inefficiencies in Polymarket for sure. There's probably also arbitrage opportunities for other competing markets with similar kinds of bets, where you can then see is there some mispricing, and you can go long, or you can bet on yes on one platform, bet on no on another platform, and then get some money with that. I think the guys of Across the Rubicon, they are focusing on this quite a bit now. They used to focus on influencer trading, as our channel did during the bull market, right? We simply track the influencers. We try to figure out what are they buying before they make videos. During a bull market, this is a good strategy. During a bear market, it's a terrible strategy. And so they moved over to Polymarket arbitrage, which is good for small amounts. But once you move bigger amounts, once you move hundreds of thousands, potentially millions of dollars in crypto, Polymarket doesn't have enough inefficiency. It's good for small amounts. If you've got just a few $1,000s, you can grow this very quickly with comparatively little risk on Polymarket. But if your amounts are larger, really in order to make money on Polymarket, you need to have some kind of insider knowledge. And that's probably one of the reasons why it doesn't get shut down, right? The politicians that do have insider knowledge about certain events, they can monetize based on Polymarket. And it's a gray area whether or not that kind of insider trading is actually legal or illegal, right? Nobody ever got any consequences from trading based on knowledge on Polymarket. So that's why I think Polymarket is actually relatively efficient in its pricing as well, because the insiders are still making money from it. But yeah, the altcoins might be less attractive right now because there's so much going on in Polymarket. Now that most asset classes are facing a bear market, what are the alternatives? Yeah, unfortunately, there are very few. So cash is king. I've got a huge cash allocation now. And with cash, I mean, of course, still something that makes returns, still that gives some kind of fixed return, but I'm not going to make much money right now outside of shorting the market, right? with shorting the market, we still make very nice gains. But outside of that, it's very, very hard. Funny that people are saying that there wasn't an altcoin season when 32k tokens per day is gone literally to 0 in 2025. Yeah, there's a dilution of not just the circulating supply, but also a dilution of new projects launching. Okay, one more question. Stashny here. Do you think the market will ever become efficient? Is relative valuation trading versus Bitcoin more profitable during a bear market? I think the strategy is relatively independent of market conditions. I'd almost say it's a bit more efficient during a bull market because the team of regular altcoin projects, they tend to sell off when prices are high. We've just recently seen this with the Trump token, right? So when we had our relief rally, then suddenly the Trump token tended to underperform the rest of the market. So when US dollar prices are high, the team tends to offload. In a bear market, it's less attractive to offload. So the underperformance tends to be even stronger, especially at the beginning phases of a bull market. That being said, it's the only real profitable strategy we have in a bear market, besides riding the momentum. It's the relative valuation trades. We can't really follow influencer trades. We can't really do anything regarding altcoin research, regarding outperformance, finding specific tokenomics plays, specific knowledge plays that will bring us much value, right? If we know, say, for a certain project that this project will launch a new feature on its platform, that kind of news might be very valuable in a bull market. If we know this early, if we talk with the team, that kind of news might not be that valuable in a bear market, right? If we are in a bear market and we know something specific about a project, that specific knowledge might not be worth much. So really, even though at the early stages of a bull market, relative valuation trades might be profitable, during that time, we might as well just make money with the bull market itself. So I regard relative valuation trades as a strategy that's more or less neutral to the entire market. The only time where I would stop doing it, where I might also then close the relative valuation trade vault, is after we have appreciated very quickly in Bitcoin and the altcoins start to outperform Bitcoin. So when we are in the rotation, when we have altcoin season, which doesn't happen much, right? It happens only for a few months every cycle. But I hope that I'm able to time that in a way that we will not be in massive altcoin shorts during an altcoin season. But the idea is that most of the time we'll be right anyways. We'll make a lot of money during that time anyways. We take profit during that time. And then when Bitcoin rallies very, very quickly from a cycle bottom, we can be much more cautious with our exposure to relative valuation trades. But in general, it should be a strategy that's more or less independent of the general market. So yeah, thanks again for watching for another live stream. This was a bit over 1 hour again. I hope the duration of the live stream is also suitable. Feel free to always give feedback as well. Looking very much forward to feedback. I'm just starting out with this kind of format. I think this is my 3rd live stream here. So any feedback is very much appreciated. As always, of course, I'm also appreciating likes, and feel free to subscribe in case you haven't yet. Looking forward to seeing you in the different YouTube videos. Looking also forward to potentially seeing you in premium and chatting with you directly. And looking forward to also seeing you in the next live stream. See you next time. Cheers.